Welcome to the end of day review for Thursday, the 4th of January 2024. As usual, starting off with the economic calendar, as you can see, we've had some significant red folder New York session news, both of which was positive for the USD, and thus we should expect GBPUSD to trade to the downside. If this aligns with our technical analysis, then shorts were surely valid. Jumping straight into the charts, in terms of the 4-hour market structure remains confirmed bullish with no change in that regard. In terms of order blocks or POIs to trade from, as you can see, everything to the left has been efficiently mitigated. We broke the last extreme POI on the 4-hour. Since then we've swept the 4-8 swing liquidity, and we've come back into the pullback phase, last point of supply. Remember, the pullback phase was validated at this point when this Choco B was body broken right here, and thus the pullback phase remains valid. Although now that we have reached the extreme and the pullback phase has achieved its objective, this is the last point of supply, which is the last point which could hold, as implied by the name. Essentially, yesterday we came into this level, thus giving us reasons to short in the London session, as you can see right here. However, the POI to trade from was validated in the London lull, and we had to wait for New York Open to occur to then consider taking any entries. Then in the New York session, as you can see, there was this positive news, and we expected that price would move to the downside rather than the upside. So this move was somewhat not concisive with or conducive to what was expected with the news release. However, as you can see, it was largely as a result of actually trying to achieve the objective set forth by the technical analysis. So price came up into this POI, it swept liquidity in the leg, and then we could essentially short. The stop loss placement was placed right here because there was only one direction to trade for the day. Also, the news release already occurred, and we knew what was expected. So given that fact, we didn't expect price to come all the way to the extreme or even wick the high of the day, and thus the high of the day wasn't a concern for being swept. However, as you can see, we didn't really have much momentum after the news release or the POI being tagged. And in terms of the ADR, I guess December's ADR is around 80 to 90 pips. We've moved 65 out of the, let's say, 90 pips. So 65 over 90 is 72%. It's not quite the 75 to 80% range that would prevent me from saying, okay, continuations are invalid at this point. However, given it's a Thursday and we aren't trading pro trend, it makes sense to just take profits depending on where and what time you considered closing the trade. You'd either take at least half an hour or potentially a 1 hour trade, but yeah, like I said, there wasn't really follow through, and yeah, that was fine, I guess. Price is probably just gonna range around for a bit in anticipation for NFP, which is tomorrow, or rather today when I'm doing the EOD, Friday the 5th of January. But yeah, so I guess we'll chat again for tomorrow's end of day review.